Welcome to the Weekly Dose by Augusta Global Insights. This video is an AI-generated summary of one of our written reports. You can find a link to the full article in the description.
So today, we're going to break down the key analysis and some really interesting market signals from our latest report. We're covering everything from some pretty surprising stock valuations to economic warnings flashing red in commodities and even the housing market.
Here's the game plan. First, we'll get a quick market overview. Then, we're diving deep into a fascinating valuation showdown between Adobe and Costco. After that, we'll check out some market alerts coming from copper and housing, see what the betting markets are saying about Colombia's next election, and then wrap it all up with the key takeaways. All right, let's jump right in with our weekly market overview. As we dig into the key signals from the end of 2025, the market's throwing us some real curveballs. Things are looking, a little confusing. Kind of contradictory, especially when you look at how some major companies are being valued. So here's a question for you. What on earth does a creative software powerhouse have in common with a massive wholesale retailer? I mean, on the surface, not a whole lot, right? But believe it or not, if you look a little closer, there's a huge lesson in here for investors. And that connection, it all comes down to one word: valuation. This is a perfect example of how a fantastic, super successful company isn't always a great stock to own, especially if the price just isn't right. Okay, let's start with Adobe. The stock has had a rough year, no doubt, down over 20%. But if you ignore the stock price for a second and just look at the business itself, it's telling a totally different story. Revenue has grown like crazy over the last 5 years, and net income has nearly doubled. On top of all that, its net debt is basically zero. We're talking about a financially rock-solid company. Now, what's really wild here are Adobe's margins. A gross margin of almost 90% is, it's just phenomenal. Think about it. For every single dollar of revenue, they keep 90 cents before other expenses. So even with everyone worried about AI, these numbers are screaming that this is a highly efficient, profitable business that's deeply dug in. So the bottom line is this. Despite being in fantastic financial health, the market has just hammered the stock, probably because of all the fear around AI competition. And the result? Adobe's valuation is now sitting at its lowest point in 5 years. That could be a significant opportunity. Okay, so that's Adobe. Now let's flip the coin and talk about Costco. And as you're about to see, it's a completely different story. Costco is currently trading at roughly 46.7 times its net income. Now, in simple terms, if you bought the whole company today, it would take almost 47 years for its current profits to pay you back. That is a very rich valuation. And this is where you see this huge disconnect. Some analysis puts Costco's fair value at around $273, but right now it's trading for over $870. Now look, Costco is a fantastic, brilliantly run company, but wow, its current price tag is incredibly steep. And this just brings us right back to that classic Warren Buffett wisdom, right? Price is what you pay, value is what you get. The whole Adobe versus Costco situation is a masterclass in this very principle. A high price doesn't always mean you're getting high value. All right, so let's zoom out from individual stocks and look at the broader economy, because we're seeing some pretty important signals flashing in both commodities and real estate. First up, copper. The price just smashed through a new record, hitting over $12,000 per ton. And this isn't just some random spike. There's a really powerful driver behind all this. And here's how you connect the dots. The Magnificent Seven tech giants are just pouring billions into building new data centers to power this whole AI boom. And guess what these modern data centers are incredibly hungry for? Yep, copper. So that massive wave of tech investment is directly fueling this record-breaking demand and price for copper. Okay, next up, we're going to pivot to the housing market, where a potential red flag is waving. And this signal is coming from one of the largest homebuilders in the United States. So get this, the homebuilder Lennar is reportedly selling brand new houses in parts of Texas for $158 per square foot. The problem is the average cost for them to build a new house, the replacement cost, is $162 per square foot. When you see a builder selling for less than it costs them to build, that signals some pretty significant stress and pricing pressure in that market. Shifting from economic indicators over to geopolitics, it's pretty fascinating to see how markets are also trying to price political risk.
Prediction markets, which are essentially just betting markets for future events, are giving us a really interesting look at the potential outcome of Colombia's next presidential election.
The data from PolyMarket is giving a 41% chance of winning to Abelardo de la Espriella, who's characterized as a hard-right politician. That puts him ahead of the socialist candidate Iván Cepeda Castro, who's at about 30%. This really suggests the market is anticipating a big political shift towards more market-friendly policies.
And this isn't some event way off in the distant future. The first round of the election is set for May 2026, with a potential runoff in June. So this is definitely a developing trend to watch over the next year and a half. What makes this even more significant is that analysts are seeing this as part of a potential continent-wide trend. A shift in Colombia could see it join a growing list of South American nations that have recently moved in a more conservative or right-wing direction. That's a dynamic that could really reshape the region's politics and economic policies. So, after covering valuations, commodities, housing, and geopolitics, what are the crucial takeaways? Let's distill it all down into a few key points for you.
All right, here are the key takeaways. First, valuation is absolutely critical. Always remember that a great company isn't always a great investment. Second, follow key commodity prices like copper. They can be a leading indicator for huge tech trends like the AI build-out. Third, watch for those warning signs from home builders, as their pricing can signal stress in the broader economy. And finally, pay attention to prediction markets, because they're becoming a really valuable tool for gauging political risk and sentiment all over the globe.
This was an AI-generated summary of a report from Augusta Global Insights. Thank you for watching.